Yes, we're an all-women panel, I like this, but it's been very obvious that actually we haven't been the minority today. So there's something about this field, there's something about impact investing, there's more in it than the rest of the rest of investing. Why is that?
So, you know, a lot of data has been thrown around on these subjects today around impact. In our work in the organization I run, the Case Foundation, we've had two central initiatives. One focused on impact investing, another focused on what we call inclusive entrepreneurship. And when we got started with them, we kind of saw them as separate things. But what became clear pretty early on is that they were moving towards each other. And let me start with some data. So last year in the United States, 90% of venture capital went to men, 10% went to women. Only 1% of venture capital went to companies with an African American founder. And 78% of venture capital last year went to just 3 places in the United States: California, Massachusetts, and New York. Now, many of you are in the finance world. And when we think about finance, what do we think? We think it's smart to diversify. But when you peel back the onion on what's been happening, where capital flows in this nation, it has not been diversified in its own portfolio of where investment is going. So that's an issue in its own right that represents risk. But then I want to come back and talk for just a minute about opportunity. What do different groups that you're investing in, different places you're investing in, different backgrounds you're investing bring? Hey, I'm chairman of National Geographic, so I'm going to use a photography analysis here. A wider aperture. When you have a more diverse portfolio in terms of who's at the table, who's looking at deals, who's thinking about the next cool company or product, you want category expertise across the board. Very diverse, personalities, backgrounds, looking at things that could lead to great investments. So I think we're super under-leveraged in terms of where we've been putting our money. As a result, we've been losing opportunities for innovation in places and among segments that can represent all kinds of new innovation we haven't touched yet in the nation. So, it's a big opportunity, and it's also a big risk if we don't stop putting all of our eggs in just a few baskets. So I think that's the opportunity here. When we talked, Liesl and I have known each other for quite some time, and we have a lot in common. And so we were trying to figure out, okay, I won't finish your sentences and you don't finish mine. But we're both on a similar track and journey in this space. But it's a huge opportunity, but it's also a huge risk if we don't fix it.
Liesl, why do you think women are, within investment, women are more in the impact space than in other parts?
I mean, I think it appeals to the way that women think more, and I mean, this comes from anecdotal information, but also from more evidence to suggest that women think about risk in a different way. I approach impact investing, and in our own family office portfolio, I think about impact as risk mitigation, broadly speaking. I think it's important. We're long-term investors. We're a family office. It's me and my husband. We're the generation that's investing, so we've got a fairly long time horizon. If I'm not thinking about environmental risk, I'm going to pay for that in 50 years. You better believe it. And so the thing is that our fundamental approach has been around risk mitigation. And so I think that I see sort of the impact space lets sort of the way that women think, I think, out of the box a little bit more. You don't only have to limit yourself to thinking about the financial risk of an investment. You can think about the social risk and the environmental risk in sort of a safe space with impact investors. And so I think that there's an affinity towards that as well. And I'm starting to see that then on the investor side as well. I'm sort of a next gen, high net worth, millennial female investor. And I've read lots of fun PwC and Deloitte studies on investors like me, exactly. And I feel like I fit right in that bullseye of no, I want return and impact and profit and purpose and all of these kinds of things. but I see this being demanded of other investors like me as well. They want to see these kinds of considerations in their portfolio, and they want to see that reflected on the teams that they are investing in.
And that includes men.
Yeah.
Yeah, so men are
And
coming
the
and
millennial
saying,
generation?
Oh, yeah.
Absolutely.
Yeah, I think so.
Well, okay, not in the millennial generation then. What about older men? Do older men, when they're investing, look and say, look, how diverse are you, because they've learned that this is actually important?
Well, I think it's important not
It's very nice, by the way, to be sitting here talking as three women about the men.
I was just going to say, I think it's important not to put people in boxes specifically. I mean, even when we talk about the millennial generation, I want to remind the audience, they range from 18 to 36. Sure. You can't really put them in a box and call them one thing, as we shouldn't do with really any segment of society. But this much there's very clear data around, and some of that data, by the way, we've brought to the market through studies we funded. Millennials and women are known to be conscious consumers. They care a lot about the products, the brands, et cetera, where they're pulling out their wallet and they're using their precious capital to buy something. We know for a fact, and data has proven it, and anyone that's a CEO in a company here knows this, many, if you're in executive ranks in companies, know that they're conscious employees. They care a lot about who they work for, and they want to make sure that they're really thinking about how to be a good corporate citizen in a lot of ways. So not surprisingly, millennials and women are really, hold tremendous potential as conscious investors, and we're already seeing this is the case. It's part of the reason that when older women today lose a spouse, one of the first things they're known to do is fire their private wealth advisor. And really what they're saying when they do that is, I don't align with the values that this person has brought to the table. There are signs of women acting differently in this space that are all around us. And it, I think, again, the two sectors, millennial and women, will go far to drive impact investing forward. And I would say one more thing, which goes to what Lisa was talking about. I spend a lot of time, guest lecturing in MBA classes. And I think it could really be summarized in terms of how beautiful sort of the view is that women and millennials bring to this. I was teaching at the Yale School of Management. This kid raises his hand and he says, well, I was impact investing class. Well, I just kind of have a question. And he was kind of shy and he didn't want to ask it. And yeah. Why would you just settle for a financial return? So think about that for a minute. At one level, you could say impact investing is radical, it's risky. Really? If all the rigor is there around financial returns, how is it risky to want more than a financial return? And I think that is the way this next generation sees it. I think for women, they say, if I'm going to put my precious capital on the table, I want to think about more than just a financial return. Now, the myth around that is, oh, well, you mean you would concede financial return to... No, never said that. Said that I want more than financial return.
So widows fire their private wealth advisors.
Yep.
That's
I saw some head
single
shaking.
most-
My guess is those are some of the bankers in the room who've heard that. I don't know.
And it's a similar, when there's an intergenerational transfer of wealth too,
Right.
there's a similar shift that happens. And I think a large part of that is because the conversation has always usually been had with the patriarch.
Yeah.
Correct.
And everyone else is just assumed to go along for the ride. And then when that power shift happens and people say, no, I want to be an investor in my own right, if the financial advisor can't adapt to that, then there's gonna be attrition. And so I think that's a real opportunity for advisors in the space who are catering to this growing transfer of wealth that's going to be coming to women and
Because
millennials.
there's a big transfer coming, isn't there?
There is a
You guys
huge,
have figures
we know
about that.
tens of trillions of dollars will transfer, and we think it's very real. But I also really need to say that I don't think necessarily that it has to be a death or inheritance situation for this to change. The other thing we've tracked with this generation that I think is very real is that, look, all young people are idealistic, and that's been true of a young generation forever. But what's really different in this situation is sort of the worldview that young people have today. They're actually influencing some of the actions and decision-making of the older generations ahead of them. their parents, and their grandparents. And again, we have wealth advisors in the room. I know you've heard this. I know bank wealth advisors have told me, routinely their clients are coming in and saying, my son says I should really be looking at this, or my granddaughter, really wants me to look carefully at what's in the portfolio. That's a little unusual. That hasn't been tradition of the younger generation influencing the older generation, but we're seeing that today. And I know, Liesl, we talked about, even if we're trying to be impact investors, and what we share in common is we both have portfolios we're taking to 100% impact investing. But along that journey, then you have to really start peeling back the onion, not only on what the social impact is going to be of the investment, but who's managing those investments, and are they reflective of the kind of values that you want to see in the people managing your money?
Well, and that's, as this space is growing, and luckily, as we've been trying to put 100% of our portfolio to work, we're at a nice time now where you can actually, I feel, find enough good product in each asset class to really pick amongst a good universe. But still, though, I'm not necessarily seeing the kind of diversity on the management teams that I want to see. And this is a fight we have at our investment committee all the time. So we were just, literally, this happened on Tuesday. We were looking at a green housing fund that we'd been diligencing. We really, really liked. It would fit in our portfolio. We've been looking to fill that sub-asset class for a long time. Here's a team with track record, really excited. You get to the bio page, and it's 5 white guys who all play lacrosse. And I have nothing against white guys who play lacrosse, but if we look in aggregate at our portfolio, we have too many of those teams that look like that. So do we sit there and say, well, hang on, we're not going to invest in this fund because we need to see more diversity on that team, and then leave this sub-asset class, and actually a pretty impactful product on the table, and leave this sub-asset class in cash, which we don't want to do, and wait for a team? Or do we invest in it and try to think about other ways to work with our financial advisors and with other LPs in that fund to try to say that we think that this is an important thing to include? But then when you get down to sort of the heart of that, why do we think it's important for this team to have more diversity? And why did this only come up in the investment memo in the impact section? This shouldn't be in the impact section. It should be in the risk section. And that ultimately is the impetus behind why I want to see diversity on those teams and why I want to encourage that team to do it. But of course, if I sort of look like me and I'm like, you need more women on your management team, you get sort of an eye roll. You get sort of like, oh gosh, here we go again with the gender diversity conversation. And so there need to be more, as much as I love having an all-female panel on women in investing, this should be not just at the Impact Conference, this should be at every economist conference, because we're talking about business risk. It's
really
material.
try. We do try.
I know. I'm sure I'm not.
So this connects with a question that's just come in on the app. How are women in the industry engaging males in the industry to understand how to invest with a gender lens? Bring them in instead of, just bring them in or keep them out of the loop?
Right. So, the data that I went through before, the 100 top venture capital firms in the nation, 92% of the partners are male. So one way you could engage males is to change up who's looking at deals. And why would you change up who's looking at deals? For the very reasons I just talked about, because it can broaden the aperture. Women will be category experts in ways men may not in certain sectors and arenas. So I think it cannot be a situation that's only driven by women. It cannot be a do-gooder thing. It cannot be diversity strictly for diversity's sake, because it's a little bit like that question about why would you just settle for a financial return. We don't want to have diversity because it's a box we check. We want to have diversity in both who's investing and what they're investing in, because we'll be a stronger economy in America and around the world if we do that. And we can't do that without 50% of the population joining us. That's just the bottom line.
I'd also like to we've talked about women who have wealth,
Yeah.
and we've talked about women in the industry, whether they're managing things, whether they're VC or whatever. But of course, there's another way we could look at impact investing through a gender lens, which is on the impact.
Absolutely.
You know, I mean, women are poorer than men. You know, there are various things that women suffer that men don't suffer, and so on. So that's not something that has to be something that women want to do or that women have to manage. That's
absolutely. It's a universal idea that, you know, that if you invest in a woman, your return on investment from a social impact standpoint is dramatic. I mean, in the developing world, we know that when aid goes out, if the woman has control of the finances, she'll return 90% of that to her family and community. The same is not true of men. That's a more efficient way to invest if you're providing granting or aid money out there. And similarly, you know, the other sector I think we should talk about is the super exciting realm of female entrepreneurs and entrepreneurs of color who are building some of these great new innovations. And I'll tell you just a couple of examples, what we're talking about here. There's a great company out of Oakland, California, some of you may know, called Revolution Foods. Started by two moms, two really smart MBA moms. But the idea came, what do entrepreneurs do? Well, they see problems and they solve them. So they were in their school, where their kids went to school, and they were horrified by what was being served in the school cafeteria. And so they said there has to be a better way. So they built one. And today, Revolution Foods is across the United States providing a healthy alternative of food. It's a for-profit company. They've served over a couple 100 million meals to date across. And they say they are chef-crafted, kid-inspired. And I've been in these schools and I've seen these kids eating these meals. So I would tell their story routinely when I was talking impact investing through the years. And one day my husband, who has an investment firm, said, well, geez, maybe I ought to check out this Revolution Foods. And so he did. And, you know, they won investment from his growth fund, not because they're an impact company, but because they were the best investment opportunity that he saw, impact or not. You know, there's a woman, Steph Spears, who was raised by a mom on welfare. And she saw how her mom struggled to pay the power bill. So when solar came along, she got super excited, thought, wow, maybe for the sort of the class that really struggles to make the bills, which I was raised by a single mom who went through the very same thing each month. It's like, are they turning the electricity off? It's a real issue if you've lived through it. Well, she said, I can do something about that. And she set out to build solar farms that are near low-income areas that can be shared solar resource. Because if you're low income, chances are you don't own your home. And so solar isn't an option. And by building these shared low-cost solar farms, we can now have so many more people accessing solar in low-income communities. I'm just telling you, the elites in Silicon Valley would not have come up with that idea or targeted that market. So we'll see new innovations, we'll see new markets as we bring new people into the entrepreneurial realm.
Lisa, when you're choosing investments and with an impact lens, are you thinking specifically about gender as one of the criteria for impact, as well as, like you said, you looked at the management teams, you know.
Who it benefits, yeah.
We tend to actually focus more on, I mean, there's lots of different ways to approach gender lens investing. We've tended to focus more on leadership and management teams as opposed to the underlying product and the beneficiary. And part of the reason behind that is because across our total portfolio, we're fairly sector and theme agnostic.
Right.
We need each fund and each company that we invest with to demonstrate social and environmental return alongside financial return. But we want the managers to tell us what that's going to be and why that makes sense in the asset class that they're in. And so we tend to be less focused on sort of dictating that theme. But then what we do want to see within the manager is diversity of decision-making there. So that we think that increases the impact as well as the financial return for that. So that's how we've chosen to do it. We also are doing it that way because we don't have domain expertise in, you know, what should Flint, Michigan be doing to increase opportunities for women in that area? I don't know. The managers that we work with that are community development experts, they do. So we want to be less dictatorial on that front, and we have more leverage with management teams of firms. If we're LPs and we can garner other LPs around us and say that it's important, like with the example I was giving earlier, that it's important to have more diversity, we feel that we can actually influence. The beneficiary, I have less control over, so that's where we've tended to focus, for better or for worse, in our portfolio.
So we've a question come in about the primary difference in approach to investing for females compared to males. I mean, we've already talked, you've said, Lisa, a different attitude to risk. Jean, have you got a difference that you'd like to highlight or that you've noticed?
You know, I don't. I mean, I think in some ways, I go back again to, I think a myth out there is that you're willing to concede, you know, your return. I think what we're always looking for is a risk-adjusted return. And I might add that, you know, the population of the planet is 50-50. So almost any impact that you're going to have, 50% that you're going to right out of the gate have, most likely, will be for women. I think what we're trying to say is, for too long, companies and innovations brought forward to the market are truly blind to what could serve women best. And again, I'm very bullish. I'm repeating myself up here, but areas I've invested in are areas that can unleash female entrepreneurs, accelerators, programs that women entrepreneurs can come into. Because time and time again, if you go into those accelerators or incubators, what you will find is the women are thinking about innovations that men will not think of because they just haven't lived those problems. The best entrepreneurs in the world build solutions to problems they've lived. And we shouldn't leave 50% on the sidelines.
Do you ever see pushback? I mean, my guess is that people don't necessarily say it up front, but maybe your husband would hear, for example, that people say, oh, you know, I've had enough of this. They're banging on about women again, you know?
Yeah. Well, I think Lisa hit it right on the mark. I mean, I think that there's this view that either you're checking a box or you're taking a risk. And I think, you know, that's a worldview. Look, have at it if that's what you want to do. From what I'm trying to share this morning, or this afternoon, I guess it is now, no, man, this is strategic and it's potentially powerful and untapped. And if you're an investor, that's what you're looking for. And so we do get pushback. Of course, we get pushback everywhere we go.
What I tend to hear is people say, you know, you should just choose the best man for the job. And if that's a woman, fine, you know, but if it's not, you know.
Okay, but let's go to that. If
Yeah.
you
I deliberately
only
put it that way.
Yes,
yeah?
no, but let's go to that. So sometimes, going back to what Liesl said, you have to compel whoever's bringing you deals to bring you deals that are varied, okay? So that they don't end up all being from young white men on the coast. It's funny, I know intentionality has been used a lot from the stage today, but if you are intentional and say, bring me a mixed group of deals, it's funny how they're out there, but it really does take intention to find them. And my experience is a little different than Liesl's in trying to take my portfolio to 100% impact, but I'm a little behind her in terms of when I started this. I haven't found across the board great impact opportunities in all asset classes. And we talk a lot about how long it will be before we kind of go, yeah, we're there. So what we're doing before we get to impact is values aligned. And then we do get into things like looking at ESG or looking at things short of, you know, what we might call pure impact investing.
Yeah.
Well, and I think you definitely get pushback. And to the point about, you know, find the best man for the job, that's an art more than a science, right? It's in the eye of the beholder who the best man for the job is. And so you tend to find people who speak your language and use the same lingo that you do and have had the same, you know, business school experience that you've had. And then things move much quicker in conversations with those people. And oh my God, they're the best man for the job. And so, you know, I mean, you do have to force yourself to move outside of your own networks. And now, I mean, look at the way that recruiting has changed, and you look at the way, you know, now, you know, a lot of people we find for our team, we find on LinkedIn, right? And that funnels you inside of your own little echo chamber further and further and further. And so, you know, even some of these tech tools actually make us go like this instead of make us go like this. And so, you know, there are some people thinking about how do you actually broaden the top of that funnel into pipeline, and you have to get a little bit uncomfortable, right? And sit across from someone, bring somebody into your boardroom, that it's a little awkward to chat with them. And it's not quite a cultural fit necessarily, but maybe you're gonna get a better diversity of opinion in the room. Maybe it's gonna go totally the other way and be grating, but you have to allow for a little bit of discomfort if you're gonna actually open this up.
Right.
And you know, that is uncomfortable, and people don't like to do that. And that's not data-driven, that's cultural, right?
Yeah. Although technology, I think, creates both a promise and a huge risk here. For instance, one of the great female entrepreneurs we like to talk about, an African-American woman, Stephanie Lampkin is her name. She has a company called Blendor. And she's a killer engineer herself. She came out of Stanford, she came out of MIT. I mean, she's got major, major cred as an engineer. And she was finding that she wasn't getting callbacks when she would look for, and she, you know, she had Lockheed Martin, she had this stellar number of companies she had worked for. But when she went to look for a new job, she noticed she wasn't getting the number of calls that her other engineering friends were getting, and what was up with that. And so what did she do? She solved her problem by starting a company. She started a company called Blendor that blinds the data on resumes so you can't tell if it's a man, and you can't necessarily tell about the race or ethnicity of the candidate. And now Microsoft and Google and others are using it, and it's dramatically changing how people are picking talent, right? Because it's not all those things that we all naturally use, our networks and who we're most comfortable with or who seems like us. So that's a real opportunity. Now let's float over here to what's happening in investing today, which is algorithm-driven investing and AI. Sounds like a really good idea, doesn't it? Because you should be able to take bias out of it. But really, because what is bias, or what is algorithm investing? It's pattern recognition. And if you're looking at where the pattern has been in the last 100 years, it's gonna look a lot like a white guy. And so without intending to, okay, you could have built-in bias that by no means are you intentionally building that bias in, but the data is gonna say, the hottest, most valuable companies ever look like, you know, they came from Ivy League schools and they're in San Francisco or they're in New York City or they're in Boston, and that's what the algorithm is going to say you should invest in.
Can I ask the white guy sitting here, I mean, if you could possibly answer as honestly as you possibly can, are we making you uncomfortable?
Yeah, and it's okay. Hopefully not.
I mean,
because
is anyone genuinely feeling uncomfortable at this point?
No, and the thing is, the
They're
message.
not gonna admit it, are
oh
they?
gosh, but like could we celebrate really the accomplishments that mostly white men have achieved through business
you're
today?
great.
We
love you.
simply couldn't celebrate it anymore. We're simply saying we're under leveraged if we leave it at that. It's not like it's the opposite of doing something. They have driven the American dream in a powerful way. I mean, if we just looked at the combined value of the companies that are driving the U.S. economy today, how can we, you know, not say, wow, that is really super success? That's not the point here. The point is, how do we get more of that?
Have we got any questions for our panelists? Oh my goodness, lots of hands have went
Wow.
up. I haven't left enough time. This lady's hand is really like this. You won.
That's
you won
a
the
wave.
competition.
That's not just a hand.
So I'm fascinated by this intentionality conversation that's been going on all day. And my question for you is, so here's a premise. The intentionality behind financial markets, up until recently perhaps, has been to maximize share owner value. I think we're talking perhaps about a different kind of intentionality here.
Correct.
Are we on a continuum? I know that the two, you know, you can argue the two can coexist, and they are. Do you believe, do you hope, do you intend that what we're seeing is actually an evolution?
I mean, I think it could be, but I don't think we quite have to jump that hurdle in order to get more impact today. I think you could even just stick with what I also think is an unsatisfactory goal of maximizing shareholder value. But even if you were just going to look at that as your goal, you have to have this conversation if you're going to maximize shareholder value. And I think let's just win that argument, because that's hard enough, and then let's totally revolutionize capital markets. But today, this is enough for most people who aren't sitting in this room, this group, that's hard enough. That's a tough enough sell to think beyond just traditional ways of maximizing shareholder value.
So Jean, you've been quite evangelical on that you don't have to give up return. I mean, this is just
Don't
not
have to give up
either or.
return. And what I would say to you is I believe we're in an evolutionary revolution. I really do. I think the train has left the station. We can all sit in the room and feel a little uncomfortable with what we're talking about. But again, if you look at where wealth is going and who's going to control it, there is absolute clear data about what they want to see in the world. Just like Milton Friedman woke up one day and said the only thing that matters is shareholder value. Well, a new generation has come along and they don't necessarily agree.